No. I guess we're live. All right. Well, we're back again with another episode of Silver Lining TV where we motivate and inspire people to create a better life through real estate. And I'm joined again with Lauren. Lauren, how are you doing today?
I'm good. How are you?
I'm doing good, doing good. We had some issues a little bit trying to get things dialed in. And what we want to talk to you guys about is the one thing every homeowner needs to know about a recession. So that's been thrown around a lot, the word recession. So we want to break that down and talk about how that affects the housing market. So, Lauren, I'm going to throw it to you because I got to actually pull up some stuff real quick. Pull it to you. What would you say, like, what are the conversations that you're having or some of the thoughts you've been having in regards to the state of the market right now in the recession?
Yeah. So, I mean, like, first things first, a recession does not equal or equivalent to a housing crisis or the market crashing.
Mhm.
So, let's just get that out of the way first.
Mhm.
It honestly, it just means that, well, and I mean, I know we kind of wanted to give an example first.
Oh yeah. So the definition of a recession is a significant decline in economic activity spread across the economy, normally visible in production, employment, and other indicators. A recession begins when the economy reaches a peak of economic activity and ends with the economy reaches its trough. True. I don't know how you is it trough?
Trough.
Trough.
There we go.
Between trough and peak, the economy is in an expansion. Okay, so that is the definition of a recession according to the National Bureau of Economic Research, the NBER.
Yeah.
So that is the recession. Now,
Right.
we're going to share with you guys some information like a graphic as well. Let me pull that up now.
Yeah, that's fine.
Okay, let's pull this up because as we're discussing everything, I think it'll be good for you guys to see this actually. Like I said, we've been having a little technology issues today, so um, do that. And I'm hoping everybody can see that pretty good. I'm gonna zoom in a little bit, maybe.
There we go.
Okay, I think that's, there we go. There we go. So the recession doesn't equal a housing crisis. So as you can see in this graph, over the years of the recessions that we've had, that homes have actually went up in price.
Mhm.
There's been twice where it went down 1.9% in 91, and in 2008, that is 19.7%. Which, if you're unfamiliar what happened in 2008, that was what the Great Recession, right? That was when we had a big breakdown in the housing market due to everybody and their mama being able to get mortgages, even if they could not verify income. Like they were just giving out
Right.
mortgages left and right. So I'm gonna throw it back to you though. So share some thoughts on the recession and how it affects the housing crisis.
Yeah, so I mean, on the graph, as we can see, its values in homes have actually appreciated 4 times throughout the 1980s through 2020.
Mhm.
And so you can see there's only been twice that it's really gone down. And the first time it went down, it wasn't even 2%.
Yeah.
Or it was right on 2%. And then in 2008, obviously everybody and their mom could get a loan.
Yeah.
So, I mean, seeing that big drastic dip, that was like the Great Recession.
Mhm.
But as we can see, like it has been consistently either 6% or a little bit below that.
Absolutely.
So,
And I remember in 2020, so in 2020, with everything going on with the health pandemic and COVID, a lot of people thought we were going to have a crash because of just everything that was happening. And what happened was, because I was having a lot of conversations with clients at that time, and some people took action and they still sold their homes and moved up to another home, while there was some other people that sat on the sideline.
mhm.
And I try to explain to people that just because something happens in the economy or there's a recession, it doesn't mean it's going to affect the housing market.
Right.
Like right in today's market, 2022, what we're seeing is rates still being, reasonable, and 5%. You may get some high 5%, but it's still a great rate. And with the home still appreciating at a fast rate, you're in a great position still to buy today and then be able to to really get massive equity over the next couple of years, right? Because I don't see. I mean, I don't know the future, but I'm very confident with the amount of equity and the appreciation rates that we have. It will continue. I do think the rate will slow down a little bit, but you'll still be getting a positive return as you own homes, that we won't have a recession affecting the housing market in a negative way, even in the near future. So I'm gonna throw it back to you because I can keep talking about it, but just keep in mind that like the two don't really correlate all the time. Like if there's a recession, it doesn't mean you're gonna have a crash in the market.
Right. Well, and kind of like the last week when we were talking about, market crashing anyway, we don't foresee that happening for a long time. We just see it normalizing. We don't see it exponentially like going up as it has been for the past few years.
Mm-hmm.
So, I mean, the recession, like you said, 9 times out of 10, it won't affect homes
Negatively to where it's going to drop the equity in your home.
Right.
I mean, again, if looking at the graph, we've seen a 91, 1.9. Most of us don't remember 91, but if it's 2008, there was, and here's the thing too, because Don just said great graph. I appreciate that, brother. The thing is Don, I remember speaking with Don and we were talking about back in 2008, and it was one of those situations to where if you are going to be purchasing property, and with the way, well, back then lenders were giving out mortgages to almost anyone.
Mm-hmm.
But the difference between 2008 and now, lenders are not, they're a little more strict on who they give a mortgage to.
Right.
They the underwriting and everything is much more strict these days, right? Based on 2020, when people thought it was going to be a crash, demand was so high for homes and people have so much equity and then rates were low, you're not going to have a crash. It's just not going to happen.
Right.
In 2008, it was a little different because, again, just things were different back then with mortgages being handed out and people being able, like being over leveraged. It's just different today. Different today. So if you're unaware of what the difference is, it's that 2008 to 2020. Because a lot of people think that 2008 is going to happen again.
Yeah, I was about to say, and I have a lot of those conversations still, like every day. It's, oh, the market's going to crash, the recession is coming. And it's like, well, again, in 2008, we didn't have the procedures that we go through now to make sure that these people can pay for these homes. And if it's too expensive, they don't get that home.
Yep.
So for people to be closing on homes and everything like that, people getting into these homes, it's because they actually can afford it now.
Yep. Yeah, they're making sure that you're going to be able to afford a home if they're going to give you a mortgage. Another thing that's key that I want to make sure we touch on is another reason why I believe that, like we're seeing what we're seeing in the market, and it's a positive thing, is the fact that people are just more educated these days.
Mm-hmm.
Like the financial literacy that people have these days is much higher. And what I mean, I'm not saying people are smarter today, but what I'm saying is people are taking time to Google stuff and educate themselves on what's going on these days. Because again, if you're thinking about getting into the market, where's the first place you go to? You go to Google and you Google in questions, right? And you start to learn about stuff like this. People like us, we come on here on Facebook to give information. That way the community is educated on what's really happening in the market.
Right.
Because if you look on the news, people are, and you may even talk to people at work and they're saying it's going to be a crash or whatever, or a recession. And they don't even really know what recession means. Right. A recession and a crash are two different things. Okay. So the more you are educated on the situation, the more clarity and confidence you have. And the people that were taking action over the past few years, they have massive equity and they're enjoying their home. And some people that bought homes in 2020, they probably already sold and moved up to the next one due to the equity they built. Yeah. And again, I do see that people who are buying homes this year will still be able to sit on equity being built, because I don't see a crash coming. I don't know for sure, but my personal opinion is it's still going to be if rates were to go to 12%, could we see a crash? You're probably more likely to see something like that. But like Ann Satterfield just said, and she's a local lender, the 5% and 6% rates are normal. She remembers when rates were 11 and 12%.
Right.
Okay. It maybe if you see something drastic like that, okay, you'll have a lot of people that are going to pause. But
I would say we've been very spoiled for the past few years for having 2%, 2.5%, even like 3% interest rate on loans. So now when people are seeing it go up, they don't want that. And it's like, well, you have to take into effect that we were in a global pandemic during the time.
yeah.
So now that we're returning back to normal, these are normal rates.
Yeah, because in 2019 there were 5%.
Right.
I remember helping buyers and people selling by that were getting 5%, high fours.
Yeah.
Right. So again, 2020, 2021, you see those 2.5s, those 3%. You're talking to your friends, hey, I got a 2.5 or I got a 2.7.
Right.
And then you're like, well, if you get a 4 or a 5, you're thinking that, you missed out. It's like, no, the reality is you buy today, still get a good rate, 5%, 5.5,
Right.
still ride the equity wave. That's still a win for you.
Yeah.
That's a huge win. But again, and we're not even in a recession technically.
Yeah.
Right now. I mean, it's like if one were to come, it doesn't mean that the housing market is going to go down or crash.
Right.
And this is proof right here.
Yeah.
But one of the things I can guarantee is, who's keeping our eye on the market and on the data?
Us.
We are, right? So, I mean, if I tell you what, if there were to be a crash, then the positive thing for people that are currently homeowners is they have so much equity in their home to where they could still be possibly protected as long as their monthly payment was comfortable to begin with.
Right.
If that makes sense, right? And at that point, you may have an opportunity to sell before it gets too bad. But if your monthly payment is extremely affordable to you where you're not house rich, money poor, right? Then you're going to be in a great position no matter what happens to the market. But for my people who are wanting to get into real estate and buy and own, it's still a great time.
Yeah.
Still a great time. Okay. You want to add anything else?
Yeah, I have these conversations every day, literally. And it's people are worried about a crash or a recession. And it's like, even if a recession were to come, again, it won't affect the housing market. And I'm like, so when I talk to people, it's like, okay, yeah, sure, Jan off the street can tell you there's a market crash or a recession, but who are you going to trust, Jan off the street or an agent that is studying and training every day
and
on
presenting
the market?
Data?
Exactly. And presenting everything to give you the facts behind it and not just saying it.
Yep.
We're giving you the data and telling you facts rather than just saying, oh, it's coming.
Right. And then all of that boils down to this one thing. Whenever is a good time for you and your family to make the move, because for some people, no matter how good the rates are, no matter, the potential of high equity in the home they purchase, no matter how good it may look, maybe it's just not a good time for them for other reasons, and that's completely fine.
Right.
But as long as you have this information and not allow yourself to be influenced by someone who doesn't have data to back it up, right? Then that gives you the opportunity to at least want to learn more and not feel you don't have a chance.
Right.
This is all about building. This is the reality of the situation. And the reality is actually optimistic, not dire, like maybe some people are saying.
Right.
So you may be in a situation where you're like, man, I didn't know that. I thought we were going to see a crash this year, right? And now you're watching this and you're like, you know what? I feel much better. Maybe I should have the conversation about trying to be a homeowner this year. And that's the whole purpose of us doing this.
Right.
Okay. Because it's so easy to get caught up in the gossip. And we want to make sure you understand the actual facts so you can make the right decision.
Yeah.
So we're going to wrap it up there. Listen, we got plenty more to talk about with you guys because every week we're going to be making sure that we're keeping an eye on the market. We're bringing important information for you guys to make that decision. Now, if you want certain topics to be discussed on the show, shoot us a message and we'll be happy to break it down and kind of give you some more clarity on whatever concerns you may have in the market. But Lauren, how can people reach you if they have any questions?
Yeah, so you can reach me on Facebook. I'm on there all the time. It's Lauren Whitaker. You can email me. It's lauren@slreg.com. And then you can also reach my personal cell phone number at 765-250-6185. And I'm obviously always have my phone on me then too.
Absolutely. Well, Lauren, and if you want, if you reach out to Lauren, she can send you a copy of this graph as well. If you want it.
Yes.
Yeah, we can email it to you. It's completely free. So yeah, we appreciate. We'll make sure Ann left another great job. We appreciate you, Ann. Thank you. Yeah, we enjoyed doing it. I mean,
I'd say it's the Anthwon and Lauren show.
pretty much at this point, right? But yeah, I mean, this is our commitment to the community and to just us being true professionals. So, and I appreciate you recognizing that. So thank you. But yeah, we're going to let everyone go. Again, if you want more information or a specific topic discussed, let us know. If you want this graphic, let us know. We can get it over to you. But until next time, y'all stay safe out there, and we'll see you on the next one.
See ya.